Hey everybody, Brian from Bellbow Traders here. It is the weekend, April 9th, 10th. And this of course is the weekend video, and haven't done one of these for a couple weeks now. I was away on vacation, as probably a lot of you know. I was off in Egypt, had a great trip, and now it's good to be back and taking a look at the markets again. And so let's look at what happened last week, and then we'll take a look and try to figure out where we might be going next week as we get into this earnings season. Okay, so let's look at what happened last week. For starters, you can see pretty much what was on the minds of investors was the Fed that released their minutes on Wednesday. And of course, lots of concern about inflation and of course what the response is going to be by the Fed with their interest rates. Some of the Fed heads starting to talk about being more aggressive on interest rate rising, and so markets responded pretty much accordingly. And you can see here some of the biggest losers, of course, was the Qs, the high PE stocks. The Dow seemed to hold up the best. S&P not too bad, down a little on the week, but all the indexes, of course, down on the week. And areas of strength and weakness, not surprising. We had a lot of the defensive sectors, such as healthcare staples, strong. Energy, which has been strong for a number of weeks now, that's a reoccurring theme. Technology and consumer discretionaries, of course, the weakest sectors. Again, not a real surprise when you've got a rising interest rate environment and inflation. So that's not really any kind of surprise there. The yields really shot up here last week, where I think the last time I looked at them there, this was under 2%, and now it's 2.72. These did actually invert, so in other words, the 2-year was higher than the 10-year at one point. Now they've gone back to being, well, quote, more normal, which is the shorter end of the curve with a lower rate, but seem to be fluctuating back and forth there. And the US dollar was pretty strong and was breaking higher last week, and that was probably due to the fact that interest rates are starting to rise and making the dollar more attractive. Okay, so let's start looking at some charts. But before we do that, as always, I like to throw up a quick ad for my book on Amazon, How to Swing Trade, Rules, Routines, Strategies of a Swing Trader. So it's there on Amazon if you're interested. So let's get into looking at some of these charts here and see where we've been and where we might be going in the coming week here. So let's take a quick look at the treasuries for starters. Again, keep looking at this chart, and every time I look at it, these bars just keep going higher. This is just an amazing run, and it's just a beautiful cup and handle, as you can see here. You can't make a pattern better than that. And the 2-year treasury just continues to rise, as I might have noticed, or you might have noticed this week. Actually, the 2-year rate actually went higher than the 10 at one point. Everybody started talking about yield curve inversion, but it's sort of come back in line here. You can see the 10's back over the 2-year rate, but again, this is not as clean as the 2-year chart, but we are moving up on the 10-year as well. So yields continue to rise, and of course that played heavily on the markets this week. So you can see here the transports are really, they put in a bit of a double top, or you could say this was a false breakout, but man, have they ever gotten taken to the woodshed here. And you can see the massive drop that's happened, and so I think some of the trucking rates have coming off here, so maybe that's in part, but you can see we are back down to an area of support, so I would expect a little bit of support here. The stochastics, the momentum indicator, does seem to be maybe making a bit of a turn here. You can see when it gets oversold, you get down under these this level, this 20 level, and then the slow moving and the fast moving lines cross, and maybe you get a bounce back. So I'd be looking for a bounce back on the transports. They've really taken a beating over the last week for sure, and you can see here we are sort of down into an area of prior support as well here, so expecting a bit of a bounce on the transports. You can see here, usually when the transports sell off, the Dow sells off as well, but you can see here the Dow is it's actually been holding up not too badly. We are sort of in a range. You can see sort of between 34,500 and this 35,000 sort of 300 area. We seem to be sort of setting up and chopping below the 200, but above the 20 and the 50. So right now volume seems to be fairly light. And again, we just seem to be stuck in this range here. And again, nothing, not a big move one way or the other on the week for the Dow. The technology sector, again, it seemed to be the one that really took the brunt of the selling, or one of the indexes that took the brunt of the selling this week. Of course, when there's a rising interest rate environment, these higher PE multiple stocks tend to get sold the most, and you can see here all our indicators are heading lower. Momentum indicators, RSI dropping below 50. You can see here the stochastics dropping, MACD sloping down. So I think we are down to an area where there is there could be some support here, but at this 50 moving average and sort of prior resistance here, maybe some support in this area. But volume was fairly light on the Qs this week, so that doesn't show any kind of institutional distribution. So maybe a bounce here, or maybe just starting to chop. And you can see here we did come up to the moving averages on the weekly and then rejected them. So again, we've got a long way to drop if we're gonna pull back to prior support, which is around 320. And if interest rates continue to rise, then I would expect a continued selling on the Qs. The SPY, again, kind of a nothing last 3 days really. It kind of just chopped in a very sort of narrow range, but you can see some of the momentum indicators again kind of rolling over there on the SPY. Again, on a weekly, nothing really going on there. I don't see it pushing to a new high, but maybe we continue to hold up here because the economy is still pretty strong in the US. And the IWM, the small caps, really had a pretty bad week. Monday was kind of an indecision day. Tuesday, Wednesday, Thursday, Friday, we basically just sold off every day. We are getting into a bit of an oversold condition here. Maybe we'll watch for the stochastics to those lines to cross again. On a weekly, again, we're sort of in this range here, right, between 190 and sort of 210, and we're stuck right in kind of in the middle of this range right now. So volume relatively light, picking up a little bit last week, but again fairly light. The VIX really, again, this kind of gives you some kind of indication of where the fear is in the market, and there doesn't appear to be a lot. We did have a double bottom here. We did come up and kind of reject, and I don't know if this is going to be an ABCD pattern or if we're just going to continue to chop sideways here. We'll have to keep an eye on those levels. The dollar, as you can see here, we had this area of sort of prior resistance, and we broke out last week, and the dollar continuing to go higher, and probably related to rising interest rates. Yeah, kind of a disappointment for the Bitcoin fans here. You can see we had a breakout. We had this pullback, which quite often happens after you have a breakout. You get a check back to where it broke out from. We tried to go higher, but instead we actually made a lower high. So here was your high, here was your lower high, and then we just really sold off from there. And so we're back into this sort of area where there was some resistance here, and now it's become support. And we'll see what happens here. But it's this failure to break higher was unfortunate. It was too bad. I was looking forward to seeing some further upside with Bitcoin, possibly some kind of a momentum reversal here. So we'll see how we finish out the week. On Sunday night, we'll see if we can start gaining some ground again here. So let's finish off with some of the stuff I'm watching here. Gold seems to be interesting to me, or at least it is interesting to me. We've got this consolidation pattern going on with gold, and certainly if you're looking for an inflation hedge, gold is quite often used as that. So if going to get inflation. Quite often people go to gold, and we had this big run up, and now we've had this pullback and sort of a consolidation. And I'd be watching for this again to break out through this 1970 range. It certainly looks to me to be positive, and I've got a bit of a gold position now. Apple, again, Apple's sort of a tech company. We've got this lower high here. We're selling off. We're coming back into an area where there could be some support, prior support here. So, we're coming into some moving averages plus some areas of support. So maybe we find a bit of a bottom here and for a bounce on Apple. This is a stock that's got to do with, it's an MLP. It's a pipeline and pays a dividend, so it kind of looks interesting, and I like the way the chart is setting up here. We've got kind of a double bottom pattern. We've had a bounce back, and now maybe we're looking at going higher here through this spread and breaking out. And CCJ, this is uranium. Uranium's looking really good. I like this stock. I've got a position in this now, swing trade. Had it for a couple weeks. It's looking really good. I think it's going to go higher. Fang, this is another energy play. It's kind of looking, it had a bit of a breakout here. It's kind of looking like it might continue to move higher here. So Fang looks interesting. Diamondback, this is one of the ways to play gold. Again, I already just talked about gold, but you can see here, this is the junior gold miners. You can play this any number of ways. You can play it with GDX, which are the senior miners. You can play Nugget if you really want to go with the beta Drexian ETF, or you can just do the GDXJ junior miners, which do tend to respond more to than the senior miners do to the price of gold. So if we do get a nice breakout on gold, this is definitely one that'll be interesting. And you can see here, you can almost see here making a bit of a wedge pattern. So a series of higher lows and area of resistance, which is around $49. So watching for a breakout there. Volume picking up a bit on Friday. MERC, the healthcare sector has really been on fire here as a defensive play in this rising interest rate environment. And you can see MERC here is getting really extended. There's been a lot of buying here. We're really extended on a number of the indicators, and I would be looking for possibly a pullback, at some point. And we are getting up into this area, what was prior resistance as well, somewhere around the $90 level, so or just under it. So I'm looking for a little bit of a pullback on MERC. Here's another stock that you could play. This is the anti-ARC Cathie Wood ETF. It's called SARC. And you can see here, double bottom. Excuse me. And I think as interest rates are going to continue to rise, and I'd be, again, watching the interest rates, but if they continue to rise, her sort of portfolio is very sensitive to interest rates, so I can see this starting to take another run here again. So I'll be looking at that on Monday and watching the interest rates as well. Shopify, just selling off again, probably more in the consumer discretionary side. So and that's one of the sectors that is getting hit as interest rates and inflation continues to eat away at people's pocketbooks, and they start to look at places where they can cut back, and discretionary shopping is certainly one of them. Silver, again, sort of poor man's gold, not doing quite as well as gold right now, but just keeping an eye on that one. Possible breakout. We are sort of in a bit of a consolidation pattern right now. Tesla. I played Tesla last week, selling some puts and calls. I sold the 1,000 put and sold the 1,100 call, and collected the premium on that as they expired. So didn't do a lot of trading last week because I was away for the better part of the week, still traveling, but that was one trade I did. But you can see here, Tesla still looking weak. We tried to break out to a new high, sort of an A, B, C, D pattern, but really just failed at 1150, which was an area where there was probably some prior resistance. And again, now we're pulling back. And just looks like we might actually head back down to this 1,000 level next week. URA again, sort of a same as CCJ. Actually, URA is the ETF, and Cameco CCJ is part of this ETF. I think it's the biggest holding, but again, uranium. If you want to play uranium and you don't want one company, you want a bunch of companies, you can play URA. Oil's kind of hanging in there. It's not really doing much, but some of the energy sectors have still been strong. And again, the healthcare, as I mentioned earlier with MERC, just really ripping here as a defensive play. Okay, so quick summary of what we can be watching for next week. Some areas of support and resistance on the Dow. Support's still at 33,000. So we seem to be sort of mid-range where we are right now. The Qs, 320 is support. We're at just under 350. Again, kind of mid-range in terms of support and resistance. And again, sort of mid-range here on the SPY and the IWM. Again, really mid-range. So we're all sort of in the middle of the support and resistance ranges in all of the indexes. What have we got for economic events? We've got the CPI coming up on Tuesday AM. We do know that's going to be a hot number for sure, and probably going to stay hot for the next couple months at least. Inflation's still raging pretty hard. And as always, over the last couple months, we've been watching, obviously, the Russia-Ukraine situation and hoping it gets resolved, but doesn't seem like there's a lot of chance of that. But we can hope. Earnings next week, as I mentioned maybe earlier, we are getting into earnings season. Seems like we just finished it, but we're getting back into another earnings season this week with, of course, the banks start kicking off on Wednesday. We've got JP Morgan, and then some of the other bigger banks following on Thursday and Friday. We've got Delta Airlines, Bed Bath Beyond, and Tuesday, we've got a couple CarMax and Albertsons. There's really nothing on Monday to speak of. So that's it. I hope everyone's had a great weekend, and we will see you in the Bearable Trading Room, hopefully at around 8:30 or 8 o'clock in the morning. We'll start with Engineering the Markets live on YouTube, and then pre-market show, and of course Trading the Markets when they open at 9:30. So hopefully we'll see you at one or all of those events. Take care, everybody. Have a great one.